Gas prices have skyrocketed in the United States over the last few months, in part because of Russia's invasion of Ukraine. To better understand why global unrest can have such a profound impact on gas prices here in America, I'm joined by Tom Kloza, head of global energy and analysis at Dow Jones Oil Price Information Service. Thank you so much, Tom, for joining us. Thank you. I want to start off by asking, it seems like when it comes to oil and gas, the price is constantly fluctuating. I think we just heard this week that the price of a barrel has dropped below $100. What are the forces behind those constant fluctuations?
Wow, it is the lifeblood of the world economy. And this year, more than ever, we've seen just incredible volatility. No one really had Russia on their bingo card as, perhaps seeing impeded oil flows. And no one had China on their bingo card as having COVID lockdowns again here in 2022. Beyond that, you've seen a lot of the computer trading, algorithms and people just chasing momentum and so forth. The oil market, physically is about 100 million barrels a day, but paper trades are many, many, many times that. So you have all the banks, all the commodity pools, a lot of speculators, and a lot of algorithmic machines that are programmed to chase prices higher or prices lower. And we went up $40 and we went down $40. So maybe we're at equilibrium right now for about 4 seconds.
Why is Russia's invasion of Ukraine so influential when it comes to the price of gas?
Well, the world needs Russian oil and refined products. Russia produces somewhere between 9 and 10 million barrels a day of crude. They use about 4 of it for their own domestic needs. And Europe desperately needs Russian hydrocarbon molecules, whether it's crude oil, whether it's gasoline, diesel fuel heating oil, or particularly natural gas. They paid prices for natural gas this winter that were as much as 60 times what we pay in the United States. So if you lose that Russian oil, you could see prices really go up for a long period of time. It would be, not the equivalent of losing Saudi Arabia, but one of the closest things to it. And the diplomacy for Iran has failed recently. A lot of OPEC countries are having trouble living up to the promise to put some additional oil on the market. So, that together with a lot of hope about pent-up demand after COVID really sent prices higher. The Chinese lockdowns sent prices incredibly lower. That was a real shock.
People are still trying to process and understand how something happening outside of the U.S. can have such a profound impact on the price of gas for them at home. Can you explain, the significance of gas being set on a global market and why something happening, thousands of miles away can have such a profound impact on Americans and the price they pay at the pump?
Sure. We always thought that this would be a year where we saw high gas prices, but by high gas prices, we meant maybe $4 a cup of coffee there or whatever, because we've lost some refining from last year, or from really pre-COVID. We've lost about 1.2 million barrels a day of refining, enough to keep the market tight if you have a driving season where people are out there taking trips. Russian oil, it's part of the world market, and the world market has imports and exports. We were importing Russian crude and some Russian gasoline and diesel. It wasn't really vital to our interests. It was more like the gluten-free appetizers on the menu, but the world needs that oil. So every time you see $1 increase in the price of crude, it translates to about 2.5 cents at the pump, whether you're in the United States or whether you're in the Mediterranean. And it was all about crude. Until 2022, it was about tremendous discipline from a cartel, OPEC, plus Russia. It's like, let's see if we can make this cartel a little bit more evil. and they had tremendous discipline. They were not releasing more oil to the market, and we have a tight market in 2022. Now, it can fall apart very, very quickly if we have a recession or if we have the resurrection of another COVID variety or variant. And that's one of the reasons why, if you look at prices in the last 2 weeks, they've been all over the place. I always mention that oil prices tend to be bipolar, but this has been like Sybil, from something, in the annals of psychiatry, up 40 and down 40 in less than 10 days.
You mentioned OPEC, so I want to come to the other nations that produce and sell oil. What are those nations? And well, I definitely don't want you to have to list out all of the nations, but what role do other oil producing nations play in influencing the price of gas for Americans?
Well, the United States will probably reach an all-time record for oil production this year. But some of the executives in exploration and production are kind of getting dragged into it kicking and screaming. And the reason for that is they've been through 2 booms, but 2 busts. A couple of years ago, the price of oil went negative, which was kind of a silly thing that had to do with some failures at the exchange, but still an awful lot of companies lost a lot of money. So we're going to see more production from the United States. A lot of countries are struggling, and I call it a 7 and 7 rule. Shale oil can be brought to market in about 7 months, pretty quickly. You decide you're going to drill in West Texas, you find oil, you bring it to market in maybe 6 or 7 months. The big, huge projects, like there's a project in Guyana, offshore, that's going to bring 1 million barrels a day to the market, they take about 7 years. So the fact that a lot of exploration and production companies haven't spent much money on capital expenditures has sort of impeded the growth of crude everywhere. It's profitable. I mean, the Saudis can make crude oil for just, can bring it to the surface for a couple dollars a barrel and sell it, even if they sell it for 50 or 60 or 70, they're making a lot of money. And shale oil can be brought to the surface for about 25 as a break-even number. But there's not a lot of money there, and they're kind of at odds with, the folks who are recognizing global warming, and I do recognize global warming, and think that we need to do something about fossil fuels in recognition of that. Europe tried to do that this winter, and they tried to rely perhaps a little too heavily on wind and solar. And the sun didn't shine and the wind didn't blow, and they saw natural gas and electricity prices just go up to levels which would inspire a recession. So you'll hear the term energy transition. It's going to have to be a well planned out transition to really wean ourselves off of some of the fossil fuels in the next 10 years. It doesn't happen in 10 months.
So to simplify what you're saying, the cost of drilling and bringing gas oil not only to the surface but to the pump, takes time and costs more domestically in some cases than it would cost, say, in Saudi Arabia, where there is an abundance of oil at their disposal and brings down the price, per barrel. And so what I want to get, and is that what you're saying?
That's true. Yeah. I mean, there's vast differences, like I say, in the United States, and there'll be people who try to gin up the numbers higher, but it's about $25 a barrel or less to bring oil to the market. So at $100, it was very, very profitable. Overseas, it can vary all over the place, but when you get into the Middle East, I could dig a hole in my backyard if I lived in Riyadh maybe and find some oil. It's kind of like a Jed Clampett meets the Persian Gulf.
As our audience tries to kind of piece together all of these moving parts that contribute to what they're experiencing in real time at the pump, it does beg the question, as you've laid out the landscape of why oil prices are increasing, what OPEC is and the significance or the context of why and how their influence is working in this current market and in tandem with and how that affects or informs the role that Russia's invasion of Ukraine and the sanctions that have followed factor into all of this.
Yeah, and Nicole, I mean, the crazy thing has happened in 2022. The oil and gas side has become incredibly defensive, defending a cartel. Now, when I think of a cartel, I think of the Medellin cartel or the Mexican drug cartels and El Chapo and things like that. I don't think of anything that's warm and fuzzy. And then you throw Russia into that. It's like, why are we defending a cartel? Defending it intellectually, I mean. And the only other cartel I know about is the Diamond Cartel with De Beers. So I think, it's very strange to see all of these capitalists defending the notion of a cartel, because we should find it reprehensible to the economics of the world or any place. But that's what happened. You've kind of got this centrifugal argument between oil and gas interests who are defending the cartel and saying, oh, it's not because of them, it's because of the energy transition moving too quickly. And then you have the Biden administration, who could probably use a little diplomacy with the oil and gas business rather than, and I don't speak for oil and gas companies, but they would probably argue that they've been demonized or they want to be put out of business. So you look at some of the refineries that closed, and they closed because the companies did not want these to become stranded assets later in the decade. They're $1 billion or $2 billion assets. So there needs to be a dialogue between the left and the right on this issue, and they need to come to the center. But like most things in politics, people have gravitated to the extremes.
I want to bring us back to the Biden administration. Thank you for mentioning them. So the Biden administration recently announced a U.S. ban on Russian oil.
Right.
What kind of impact could that have on the price of gas in the U.S.?
That was more ceremonial than anything else. I mean, we use some Russian oil, but we use some of the gnarly stuff. That's not exactly an industry term that comes out of Russia that really requires some sophisticated, complex refineries to turn into gasoline. We were certainly not dependent on it. Europe is. Europe is very, very dependent on Russian crude and Russian refined products. And to a certain extent, China is very dependent on some of the stuff that comes out of Siberia. So, it's a big deal. When you've got a producer that makes, 9 or 10 million barrels a day and has refineries, and there's the possibility that they may, anyone that knows Russian history knows that their leaders can put them through incredible pain. They may decide that they don't want to sell oil to some Western interests. So we're not done. We're still in a market where we could move $40 up or $40 lower in a heartbeat. And that's scary. It really is scary. But the United States doesn't itself need Russian oil. We import about 4 million barrels a day from Canada. So we want to have good relations with Canada. If we went to war with them, we'd be in a lot of trouble, particularly in the National Hockey League. But anyway, it's not that we needed the Russian oil. It was largely ceremonial. And we'll see what happens with the sanctions as they get tougher. It could be that oil will be contained in Russia and it'll pile up. They used to store it in open vats in pits. So I don't think there's a Russian Environmental Protection Agency. So it'll be interesting theater to watch.
The average retail price of a gallon of gasoline has risen by 25% in the past 2 months and by about 70% since President Biden took office.
Right.
Is the administration responsible for these increases?
No, I think they're responsible if we get increases in maybe 2023 or 2024. And the item that's cited the most in ascribing improper blame to the Biden administration is that he signed an executive order to not proceed with the Keystone XL pipeline. That was a supplementary pipeline that was going to bring more Canadian oil, not necessarily to the United States for use, but to the Gulf Coast, where it could be exported to other countries. So we continue to import about 4 million barrels of crude from Canada, so we've got a good supply there. The other things that he's addressed, leases on federal lands or whatever, there's plenty of acreage to yet be exploited. But what's happened, and this happened really before President Biden took office, was that Wall Street was burned by oil and gas companies, some smaller ones, that went under. or that had to pay off bonds or had trouble paying off bonds because they borrowed money on the premise that crude oil would be $50 or $100, and it dropped to a negative number. So Wall Street, to a certain extent, and the banking community said, we don't want to lend you money to drill for more oil. And among the CEOs, it was even communicated that, oh, we need to be disciplined. We don't want to exploit this, or we're going to have another bust. So that was one of the big moving parts as well. The president restored corporate average fuel economy standards that were passed during the Obama administration and were kind of pulled back during the Trump administration. And ultimately, that will help preserve the amount of gasoline that we use.
You know, the price of a tank of gas in Texas is different than the price of a tank of gas in California or in Michigan, for that matter, or all over the United States. What are the other factors that affect the price of gas in different parts of the country?
Well, in Texas, you've got so many complex refineries, and you do have the crude oil in your backyard in West Texas there. So that helps. In other states like California, you've got about $1.30, maybe $1.26, $1.30 in taxes and carbon fees that the public has to pay at the pump. They may not see that, they'll see the federal tax or the state tax, but there's a price for carbon that gets passed through to the consumer. And that may come to other states as well. You have lower state taxes in the Southeast and kind of the Gulf Coast than you do otherwise. And some of the gasoline that you use in major metropolitan areas is a little bit more difficult to make and a little bit more expensive. California is really the laboratory for the rest of the country. Now, I hate to say that because the prices there are about $5.80 today. Nobody wants that laboratory visiting them anytime soon, but it's not a free lunch. If you want to decarbonize the world and wean large segments of the population off of fossil fuel, it's going to be expensive and it's going to be painful. The oddity or the irony is that if you looked at it and you looked at 2008 prices and adjusted it for inflation, with the exception of California, we're not paying nearly as much as we were there. But a person doesn't go to a gas station and see the price of $4.40 and go, well, adjusted for inflation, it's fine. I'm happy with it. They look to not fix the problem, but they look to fix blame. And then they go out and they buy an SUV, a huge one, the next time they're shopping for a car because they think that protects them.
As you mentioned, the price is different in different parts of the country for a lot of different reasons. And, they are noticeably high in California. But I'm curious to hear, from a historical standpoint, is this the highest they've ever been?
Yes. California now features the highest gasoline prices and the highest diesel prices we've ever seen anywhere in the United States. And I think probably if you adjust it for inflation, it would still be the highest. In California, the regulators there want to be weaned off of fossil fuels. You've got different cities and towns that, are going to prohibit fossil fuel using vehicles. They want to be moving to electric or carpooling or mass transit. And it's going to be kind of a labor of Hercules to get that done. It's expensive right now. But I will tell you this, before you were born, I used to visit California, and the air, you could cut it with scissors. It was so smoggy and stuff. They have cleaned up the air by using a lot better fuel mixtures over the last 30 years. So there's a silver lining in that dark cloud of higher prices.
As people try to navigate processing this information and trying to cut costs, what can they do to save at the pump? What would your advice be to our viewers who are looking to just manage and navigate this financially?
I'm going to go way back to my college when Steve Martin had a routine called Let's Get Small. And I think we need to get, a little bit of let's get small, smaller vehicles, less living large. To a great extent, commuting has been transferred to a lot of working from home, and that's going to help. And, I think electric vehicles are going to have a place. The problem with electric vehicles are that some of the countries that we have horrible relations with through no fault of our own are the places where a lot of the metals and rare earth materials and whatever come from. So it's going to be tough to make that transition to EVs. And of course, the supply chain issues that we've seen related to COVID make for a messier sort of transfer. But the other thing I would say is you don't need a car that uses premium gasoline. Premium gasoline is 60 cents above regular, and regular is expensive enough right now. Almost all cars can run on regular gasoline. And there's like this dirty little secret out there that, oh, I'm going to treat my car by running 93 octane. You probably don't need to do that. Even the auto manuals don't say that. And another thing, and I think we're going to see this, we're going to use more ethanol in the United States. Now, you can argue about, how much fuel goes into raising the corn, that goes into the ethanol, but I think we're going to see more of a gasoline mixture that's 15% ethanol and 85% hydrocarbon. And that'll probably be mostly in the Midwest where, they like to embrace corn and have corn festivals and everything, but we'll see it.
A lot of people are also wondering, how long is this going to last? Will we be experiencing these high prices forever? Is this temporary? How long should people keep an eye on this, and how permanent or impermanent is it?
Before Russia, my view was that this is temporary. There's a lot of investment houses that would say that we're entering a super cycle, not just for oil, but all commodities. I tended to believe, no, you're injecting hope, and the investments you've made or the speculative bets you've made on the notion of $150 to $200 barrel crude. Russia complicates it. I mean, if peace breaks out in Ukraine in April, this is not the new normal. We'll see cheaper prices for crude oil and for products. We're going to see a lot more crude from the U.S. We're going to see more crude from Canada, Norway, Guyana, Brazil. There's a bunch of countries. I think the United Arab Emirates, among the Persian Gulf countries, wants to pump more crude. And, we will probably see demand level off. The problem is we're going to add another billion people to the planet in the next 14 years, unless something happens. And another billion people, let's say, are going to come into the age where they want to be mobile and drive. So it's really tough. It's kind of like the burden of Sisyphus to get out in front of it and really turn this thing around.
Tom Kloza, Head of Global Energy and Analysis at Opus, thank you so much for joining me.
Thanks for having me. Appreciate it.
I'm Nicole Ellis for the PBS NewsHour, and for our viewers, thank you for tuning in.